I'm Owen Bigland. This is the Inside Edge video blog. As promised, part 2 on the NDP government's new budget and their new housing strategy and the new taxes they introduced last week. So I've gotten a little bit more information here over the weekend. First up, from what I understand now, the Whistler area is going to be excluded from the speculation tax, or what I like to call the vacation home tax. And we'll see. There could be some other areas, I think, on the island. For right now, areas like the Okanagan, those are going to get hit with this new speculation tax. But, you know, it's too early still here to get into much more details on this tax, because on my video blog, my YouTube channel here, there was a whole bunch of comments on my last blog here. I'm hearing all kinds of wacky stuff that's out there about how this speculation tax is going to be administered, who's going to be caught up in this. Some people are saying that, you know, if it's an empty home and you're not filing a tax return, or even the people that are filing a tax return, if it's not enough money to substantiate the house, you're going to have to pay the tax, which I have not heard. So people need to be careful here. There is some crazy stuff. So in other words, they're saying the government is going to dictate how much money you need to declare in your income tax to try and cover these satellite buyers. So, you know, a satellite buyer is someone who buys a house. They've been around for years. The wife and kids stay in the house. The husband goes back to China to make a living. And there's a bunch of them in Richmond and on the west side of Vancouver. They're only declaring $10,000 or $20,000 or $30,000 a year. Very low income. Some people are saying now on some of these message boards and on the media that, you know, if you're only declaring $30,000, that's not enough. And Revenue Canada is going to need you to declare a lot more income, 100, 150,000, whatever. I can't find anything that is talked about how much money you're going to need to declare on your income tax. All I've heard so far is that if you're not filing a tax return in BC, that you will be subject to the speculating tax. But let's see where this goes. I think there's going to be more areas that are going to be exempt as well, not just Whistler, but some other areas, so that these people that own vacation homes don't get caught up in it. And I'm going to do another blog on that in the next few weeks here, or next week, on this vacation home scenario. I've got a couple of clients that may be exposed to this tax. No big deal for them. They're either going to put a tenant in the property or pay the tax, or they'll have me sell it. We'll see. But I'll talk more about that in the next couple of weeks. Now, let me address a few things here, though. A lot of people were commenting, you know, well, Owen, what do you see the solution here? I'm saying here that this new NDP taxes that have been announced are really just kicking the can down the road. And I know a lot of people don't want to hear that. There are a lot of people that supported the NDP, and hey, they want to believe. Everybody wants to believe that this was the answer to all the problems, and this is going to make that Yaletown condo go from 700 down to 400, so that they can now buy in, because they've got a spare $100,000 on the side and they're just waiting for this buying opportunity. And I don't think that's going to happen, of course. But hey, you got to believe. You know, that's why people continue to buy season tickets to the Canucks, and people keep buying season tickets to the Cleveland Browns. You want to have some faith in the government, and they're looking out for you, and they're going to save us from this. But I've got news for you. Just like Santa Claus and the Easter Bunny, it's not going to happen. And I know there are a lot of people that are watching this blog now that are not able to handle the truth. And if that's you, you should probably tune out and probably stop watching my blog here. Why are you beating yourself up? I'm just trying to unbiasedly here give you both sides of the table. And again, I've blogged so many times about this over the last 3 years, especially the last year, on the foreign buyers and the way we really need to tackle this problem. Go back to my other blogs. I just did one 6 weeks ago entitled "Buy a House, File a Tax Return." But I was doing tons of them last summer. You know, yes, I'm a realtor. Taxes, foreign buyers tax, new PTT, none of this is going to make any difference to my day-to-day business. None of it. If anything, these taxes, I'm even busier. But some people just don't want to face reality here. And that reality is they think that the government is somehow your friend and they're going to help you buy a house. And they are not. And until you realize that, complaining on the sidelines is you're just going to kill yourself. You've got to come to reality here that I know you want to believe that the government's going to bail you out of this and you're going to be able to afford a house. They're not. So you may want to tune out here, because I'm going to now, for about the 8th time over the last 18 months, I am going to explain to you here. I'm going to try and keep it as simple as possible, the real elephant in the room here. What is going to need to be done to level the playing field? Because I want to see the playing field leveled too. You don't think that I don't see some crazy price increases here? Do you think condos going up 30% in a year is normal? It's not. Do you think the price of those new Westminster condos that I was selling 3 years ago for $250 and are now selling at $500 is normal? That's not normal. One of these days, as I said for a long time, we're going to get a run-of-the-mill market correction. We're due for one. That's what markets do. I've been in this business 30 years. I've seen it all. But the government here and these additional taxes are not going to solve the main root of the problem here, which in my opinion is, well, it is. This is not my opinion. Read some of the experts. It's the unchecked capital that's coming in from places like China. And the other big one, which doesn't get a lot of play, is the principal residence exemption and the abuse of the principal resident exemption. This is where the big money is going, folks. You're not going to like what I have to tell you here, but I've talked about this many times. I'm going to explain to you, we're chasing nickels and dimes with these piddly taxes. Meanwhile, the billions, the hundreds of billions of dollars is going out the back door here. And let me explain to you. The problem that needs to be addressed here, and I think everyone reads it, there's a number of problems here. It is massive inflows of capital, unchecked, untaxed, flowing into Vancouver real estate, Toronto real estate. It's not just Vancouver, it's Southern California, it's South Florida, it's New York, it's London. I talk about it in my book. I mention it several times about how some very well-known economists are saying essentially the world is flat now. With the technology we have, where people, resources, and money can flow in the blink of an eye electronically, money and capital can flow much easier than it was 5 or 10 years ago. So what we're having here, if everyone knows, is billions and billions of dollars that are flowing into the Canadian system here. Untaxed, because the money has been earned, let's say, in China. Here's where, please listen to me carefully here. Here's where the problems happen. The money is coming in and people are buying properties. They're not buying them as foreign buyers. That's just a smoke and mirror show, folks. There was some, but now since the foreign buyers, the ones that were buying were in the process of getting their citizenship or their PR status anyways. Now, the only thing the foreign buyer's tax is delayed it. Instead of buying it just before they get their PR, they'll wait until they get it. And we are minting thousands and thousands every year that are coming in from the Quebec Investor Program. I've blogged about it. Look it up. Newspapers have done many stories on it. So all the foreign buyer's tax is caused these buyers to wait a few more months and buy after they've got their PR or their passport. With me so far? They are then buying a house, a principal residence, let's say a detached house in Kitsilano. That money that they're paying has never been taxed in Canada, of course, so it's a little bit unfair. You know, for you and I to buy a house, we've got to earn income in Canada, and we are heavily taxed here. 50 cents of every dollar I earn, it kills me. I've got to have a bottle of tequila on my desk here when I do my income taxes every year. I've talked about it. The tax bill I pay, the income tax, is brutal. Half of everything I earn goes to Revenue Canada. Whereas these foreign buyers, of course, don't have that hurdle. The one advantage we get as Canadian taxpayers, the only real advantage we get, is that we are allowed to buy a home and designate it as a principal residence for tax purposes, which means that when we buy that house, live in it for 10 or 15 or 20 years, the kids grow up in the house, and we'd eventually sell it, paid $500,000 for it, sell it for $2.5 million. That $2 million capital gain goes to you tax-free. I've done lots of blogs on the advantages of the principal residence exemption. It's the best thing we have. They don't have that in the United States. It's capped. We have it unlimited. Principal residence exemption has minted more millionaires in this country than all other sources combined. So when I buy a house here, if I lay down $1 million down payment, that means I've had to have earned $2 million to get that $1 million down payment. The foreign buyers, of course, are avoiding that. They're bringing the capital in. Now, how they're getting the money in is, you guys talk amongst yourself. There's millions of stories. They're wiring it in $50,000 increments. They're always one step ahead of the game. The money is now transferred at the blink of an eye. There are things going through the casinos and all kinds of stuff, but that is just a small drop in the bucket. Most of this money is coming in through the banks, through holding companies, limited partner, whatever. Another topic. I've already blogged about it. However the money's coming in, they're buying the principal residence. They are now avoiding any taxes when they bought it. They are allowed now to designate that house, just like I do when I buy my principal residence, for tax purposes. So they can buy the house, tear it down, build a new house, sell it 2 or 3 years later and make a $2 million profit on it, and all that money goes to them tax-free. But here's the thing, and I blogged about this. They are abusing, a lot of them in many cases are abusing the principal residence exemption. The husband, who's the real bread earner back in China, is bringing in $5 million, let's say. How he's doing it, I don't know. Figure it out one of these days. I'll get into it in a minute. He's buying one house for him that he's on title. He's putting the wife in another house, and he's putting his 22-year-old kid on a third house. I've had this in my neighborhood where I used to live, in a detached neighborhood in West Richmond. The house behind me, it was an older house, torn down, $3.5 million house, and on title was a student. Tear down the house, build the house, they live in it, the student does, or at least that's what's reported as he's doing. Sell it 2 or 3 years later, have a $200,000, $2 million capital gain. That money flows to this UBC student tax-free. And this continues on. So they are buying multiple properties from money coming in and putting them in different names and designating each one, putting a kid on title, the wife on title, the husband on title. Each one has a principal residence now. And then they're later selling them or building a new house, flipping them. And we're talking hundreds and hundreds of billions of dollars just in that principal residence exemption. This is where the big money is going. You have to understand that. I'm just trying to help. Don't shoot the messenger. I know you want to believe that these little piddly taxes on the NDP are going to solve the thing. You're looking after dimes and nickels there. This is where the big bucks are happening here, folks. So my solution to this is I blogged about, I've done many blogs, I commented it on this weekend, spent too much time commenting in it, which I'll get to in a minute too. I don't have the time for it. But the solution is this. Anyone who wants to purchase a house, if they, and I don't know where, we're going to have to track the money or where they're getting it in, but if they buy a house and they cannot declare that the income or the funds used to purchase that house was funds that were earned in Canada and taxed in Canada, so now it's net income used to purchase the house. If they cannot produce the documents to do that, so they haven't filed a tax return for the last 2 or 3 years, and if they're putting down $1 million down payment, that means they've had to have earned $2 or $3 or $4 million in Canada. It's net tax. If they can't declare that, then they can still go ahead and buy that house, but they cannot declare it as a principal residence for tax purposes. And one step better, when it comes time to sell that home, a year or 2 years or 20 years, it doesn't matter, they are taxed at a full marginal tax rate. So if they sell the house 5 years later for $5 million, that entire $5 million is taxed in that tax year at a full marginal rate. So that's 50% tax. So they would pay $2.5 million on the sale in tax. You do not get the capital gains tax exemption. Because if I sell a rental property and I've made $1 million on it over the last 20 years, I'm going to take advantage of, I get a capital gains exemption on that. Only half of that $1 million, 50%, is taxable at my marginal tax rate. So if I make $1 million sale on a rental property I sell, 500,000 of that would be taxable at my marginal rate. So I'm going to pay $250,000 in tax. Whereas this guy, because he did not file an income tax, the funds were not net funds taxed in Canada, he will pay a full marginal tax rate on that. So if he made $1 million, he's going to pay $500,000 on that. That would at least level the playing field. But here's the thing. The NDP government knows this. They know that this is where all the big dollars are. If you don't think they do, you're kidding yourself. The federal government knows this. They're not that dumb. But the problem is, there's a number of problems here. A, tracking these funds coming in is going to take a very, very concerted effort here from a number of sources. It's going to have to start with the federal government. It's going to have CRA. It's going to have to include the Canadian Bar Association. It's going to have to include all the Canadian banks, all the notaries. It's also going to have the cooperation of the Chinese government and all their banking and financial institutions as well. That's the only way you're going to be able to at least have some sort of handle on how these funds are coming in. So it's going to take an effort from all those sources, and we'll throw in the provincial government as well, but they're a minor player in this. We need to get all these other sources all aligned before we're going to be able to get a handle on it. And then again, but the first step you can do to at least balance it in a big way would be to start putting a handle on the abuse of the principal residence exemption. And just like I had explained, any money that's coming in, if you didn't pay tax on it in Canada, then you cannot designate it as a principal residence. And when you sell it, the full amount will be taxable at your marginal rate. You don't get that 50% capital gains exemption. And I want to point out to people too, everybody thinks that all this money is flowing, dirty money from China, and it's not. I have got lots of clients over the years that I have sold homes to, and I've represented on the buying side. Many of these people came to Canada 8, 10, 15 years ago, and they have established businesses in Canada. They're working. They're in the import-export business, the food business, the fish business. I know a guy that has car washes. They employ dozens of people, and they pay taxes in Canada. So the guy that immigrates here 5 years ago, starts his business, files a tax return, he's got 10 employees, he's making $500,000 or $400,000 a year over the last 5 or 6 years. He saves $1 million for a down payment. He can now buy that house and designate it as his principal residence for tax reasons because he's gone through the proper steps. He's declared that income every year. He's been taxed on it in Canada. He's using after-tax dollars to buy the house. Now he is good to go. He can buy that house. He can sell it, flip it down the road if he wants, whatever. If he makes a $500,000 capital gain and he's been living in the house, that $500,000 is free and clear. So it works both ways, and there are a lot of buyers that have paid taxes, substantial taxes, in Canada. But there's also a lot, I know it too, that have brought this money in untaxed from China, buying principal residence, and even worse, as I say, the big abuse here that people need to understand, the big money is going in putting different names in title, and then later on selling these homes and declaring it as a principal residence. And that should be something that the federal government, Revenue Canada, needs to get on board with this. NDP is not going to do it. Liberal government's not going to do it. A provincial government doesn't have the power. They need to sink this in. And I don't know when that's going to happen, but until that happens, the big money is going out the back door here. So I want to see that solved just as bad as everybody else does. But I want to point out to people, that this new speculator tax, which I'm going to do some more stuff on, it's not going to play a big part in it, unfortunately. Yeah, you're going to get some people, I take it, that, or I've got empty homes. Now, I don't know. I mean, all my clients, and I've got clients that don't reside in Vancouver or BC that are investor clients. They've bought properties here, but they've got tenants in them. I don't understand the guy who leaves a condo or two vacant. I guess they are parking money, and I guess they're out there, and they will get caught up in this speculator tax, and they should. But that's going to be risky too here. This is a pretty unwielding tax when you think about it, and why I don't want to speculate much more on it. Because let's say the guy does have a couple of empty condos. If he's in Vancouver, he's already caught up in the empty homes tax anyways. So we've already got those covered. Let's say he's got a house up in, I don't know, Kelowna, that it's empty. And he's not filing a Canadian tax return. Well, I guess maybe he will file a Canadian tax return. I don't know. I mean, and if he does, is the provincial government going to levy how much he has to declare every year? Is it, if I declare $10,000 in income here, am I avoiding the speculator tax, or do I have to declare $20,000? What is that amount? The news I saw in the Globe and Mail was this speculator tax or vacation home tax is going to be similar to the empty homes tax. I haven't heard any news yet, and people I think are jumping the gun here about how much money you actually have to declare as a tax return. All I'm hearing is it's going to be like the empty homes tax. You check off a box. You're declaring, are you a taxpayer in British Columbia and in Canada? Yes. Doesn't say how much you're declaring. A lot of these families in Richmond are declaring $10,000 and $15,000. I don't know. Are they going to now step in and say that's not enough? You got to declare $50,000 or $60,000 a year to substantiate that house and not pay the speculator tax? Let's see. But the real white elephant is the money coming in unchecked, buying principal residences, designating them for tax purposes as principal residence, and putting multiple names on title and different homes. That's where the big money is going. Until we get that problem solved, these other things aren't going to do a whole lot, I don't think. We'll see. And I think hopefully we're going to get some exemptions for people that own vacation properties up here. Time will tell. Whistler, I think, is now I'm hearing is not going to be covered, which is good, because there's a lot of Americans that have owned chalets up there for decades, and they shouldn't be taxed on this at all. This is the wrong people you're carpet bombing here with this tax. So stay tuned for more. It's an unwielding tax here. I ramble a little bit. But as I get more news later this spring, I'll do some more updates on it. I'm going to do another one on what I'm calling the vacation home tax. I know it's a speculator tax, and I want to see the right people get taxed on that. If they are parking capital here, like the NDP government says, and they're leaving these properties empty, then for sure, let's put a tax on them if they're not filing a tax return. Good idea. But I want to see the people that aren't speculators, that have got vacation homes up here and have owned them for many, many years. They should not be tied up in this. That's unprecedented what we're trying to do here. I'm Owen Bigland. As always, I'll see you next time.